Financial Services Insurance, Topic 944, applies to all insurance entities that issue short duration contracts. The FASB issued Accounting Standard Update 2015-9 in May 2015, which enhanced existing disclosure requirements. Topic 944 is important so that preparers of financial statements can prepare financial statements that are in compliance with US GAAP. Preparers need to consider the time impact and the level of additional detail on loss reserves and claims details when preparing the financial statements. The new disclosure requirements apply from 15th December 2015 for public insurance companies and for 15th December 2016 for all other insurance entities. All disclosure requirements apply retrospectively to comparative periods, except for those provisions that apply to the current period only. 944 applies to insurance entities that issue short duration contracts. Attributes of a short duration contract are: the insurance contract provides insurance protection for a fixed period of a short duration. The contract enables the insurer to cancel the contract or adjust the provisions of the contract at each contract period end. The changes can be adjusting the amount of premium charged or coverage provided.
The main improvements on the existing disclosures provides increased transparency of significant estimates in measuring the liabilities for unpaid claims and claims expenses, and provides additional information to analyze the amount, timing, and uncertainty of cash flows from insurance contracts and development of claims estimates. There are 5 key areas of disclosure about the liability for unpaid claims and claims expenses which are required. You need to disclose incurred and paid claims development information by accident year on a net basis after considering reinsurance for the number of years which claims incurred typically remain outstanding. Note that this is not to exceed 10 years, including the most recent statement of financial position. You need to disclose a reconciliation of incurred and paid claims development information to the aggregate carrying amount of the liability for unpaid claims and claim adjustment expenses, with separate disclosure of reinsurance recoverable on unpaid claims for each period presented in the statement of financial position. You need to disclose, for each accident year presented of incurred claims development information, the total of incurred but not reported liabilities, plus expected development of reported claims included in the liability for unpaid claims and claim adjustment expenses, accompanied by a description of reserving methodologies as well as any changes to those methodologies. You need to disclose, for each accident year presented of incurred claims development information, quantitative information about claim frequency, unless it is not practicable to do, accompanied by a qualitative description of methodologies used for determining claim frequency information, as well as any changes to these methodologies. You will also need to disclose for all claims, with the exception of health insurance claims, the average annual percentage payout of incurred claims by age, which means a history of claims duration for each accident year. The required disclosures should be aggregated or disaggregated based on information deemed useful to the readers of the financial statements. Please note that in the first period of application, the claims development table need not exceed 5 years of presenting previous year's information. Additional years are added to the disclosures until it reaches the 10-year maximum requirement.
In conclusion, captive managers, in conjunction with the actuaries and claims handlers, should compile all the required data in advance to avoid delays in implementation.